Today I will be sharing with you guys an extremely simple ICT strategy that I've been using in my prop trading. It has been an absolute game changer for me and has helped me secure funds and payouts at various prop firms with many more in the pipeline. It has clear and easy rules, no daily bias, and is ridiculously simple to learn. And in this video I will be sharing the step-by-step blueprint as well as performance stats of over 400 trades. So if you're in the market for a super simple trading strategy to help you get funded, stick around. Okay, just before we jump in, I have to mention that this strategy is one I got from Casper SMC on his YouTube channel, so a huge shout out to him. It is, however, one that I have done dozens of hours of simulation and backtesting on to fine-tune and add it to my trading arsenal. And if you stick around till the end, I will share those stats as well as some estimates on how much you can expect to earn using this strategy alone. Now let's get started. Okay, let's quickly look at the strategy blueprint. And I'm going to start us off with the chart setup. You're going to need to set your time zone to New York time. You can set this up on any trading or charting platform, but TradingView is easiest. Now mark the following times: midnight, 7 a.m., 1 p.m. and 5 p.m. And the time frame we will be using is the 15-minute time frame. That is all you're going to need for the strategy. And the rules are as follows. Your execution window is between 7 a.m. and 1 p.m. New York time. During your execution window, look for any liquidity run and structure break after New York midnight. This means it could have already happened or it might appear during your execution window. If you do not yet know what a liquidity run or structure break is, it might become more clear in the examples, and I will provide some info in the description. This window I refer to as the price action window. The run on liquidity must sweep a level not further back than 1 p.m. the previous day, so essentially you won't need more than 1 day of data. I refer to this as the price window. Once this occurs, you can look to enter the market on the 61.8% pullback, ideally using a pending order. Any pending order that hasn't triggered by 1 p.m. gets cancelled. Set your target on the minus 0.27 fib extension. I will show you how to set that up soon. This will give you around 2.3R return before trading costs. I personally close any trades before 5 p.m. rollover. But other than that, this is a set and forget strategy, so no need to manage your trades. Alright, now that you know how the strategy works, let's take a look at a few chart examples. First, let's quickly take a look at how to set up the fib tool. To set this up on MetaTrader is super simple. You will obviously use your fib tool and you will need to go to the properties and set these three levels. The 0.618, the 1 and the minus 0.27. I also add this info in the description, which allows the fib tool to display the exact levels to make it easier for me to place my trades. And to set it up on TradingView, again, you will use your fib tool. You will use the exact same three levels, the 0.618, the 1 and manually add the minus 0.27. I also added a bit of background and this is how it should look once it is set up. Okay, I'm going to start us off with quite a textbook example and one that was recently shared and traded in our trading room. And we are looking here at the USD Swiss franc 15-minute time frame. Now we are about to enter the 7 a.m. New York time trade window. Doing our analysis before the open, what we need to look for is a liquidity run and structure break to occur during our price action window, which is from New York midnight. This line here is the New York midnight line, and I use an indicator called session breaks on TradingView to mark off the session lines to help me with backtesting and during my trade window. So I am looking for price action to occur after this line at New York midnight, this area over here. And here we see that we do have a stop run that occurred after New York midnight, and let me just mark that off on the chart quickly. And that stop run had to sweep liquidity within our price window, so no further back than 1 p.m. the previous day, this line over here. And you don't need to look any further back than this. So we do have the liquidity run, and it was followed up by the structure break over here. Let me just mark that off. So now we are looking to enter the market on a 61.8% retrace. And I am going to use my fib tool to show the entry point, drawing it from the top to the bottom. Now it is pretty simple. You will place a pending sell on the 61.8% retrace with your stop loss on the top and your take profit line on the minus 0.27 fib extension. Just remember to adjust for spreads according to your broker. And moving forward, here we had the start of our trade window at 7 a.m. And a few candles later, our entry triggered and price fell quickly to our target. So a pretty clean and textbook trade, this one. Bear in mind, not all will be this clean, but this is a really good example. If this trade did not trigger by 1 p.m. New York time, I would have cancelled the pending order. And if the trade was still running before a rollover at 5 p.m., I would have manually closed the trade. So that is the setup in a nutshell, and I will run you through a couple more examples quickly and then also share some stats and figures to give you an idea of what you can expect to return using the strategy, trading it only on 4 main currency pairs. Okay, here's another quite textbook example, and we entered our trade window, which is 7 a.m. New York time, and we have this little impulsive candle. Now, looking back at our price action window where we're looking for the stop runs, we did have this little spike up, but it didn't run any liquidity in our price window, so we don't really have any trade setups yet. But once this price shoots up during the New York 7 a.m. session, we do have a bit of a stop run there. And then we also have the structure break. So let me just mark that off. So this satisfies our rules. We got the stop run and we have the structure break. And what we are looking for now is the market to return back to the 61.8% where you place your pending order, and then we target this fib extension, which also happens to be right at this liquidity low. Now moving forward, we did have a deep spike into this level, but then the market crashed and we actually ended up spiking that level to the pip. This is probably the best looking setup because it is with the trend. So if you have a little pattern like this, I tend to risk a little bit more because this is sort of premium setup territory. And if I can just do one more example, this is my most recent live trade with the strategy. And this was on the 23rd of April, and it was on the USD Swiss franc. I actually logged this on my trading journal. And this was basically the setup. This was the NY7 entry time. And we had a bit of a stop run here. We had the structure break. I did share this on our trading room. And this was how it ended up playing out. And I did take this on a live account as well. Using the Easy Order EA on MetaTrader 4. I just placed my pending order with my stop loss and my take profit. I ended up making about 2.2 R on this trade. So this was a nice $4,000 trade, and it was about as textbook as it gets. All right, now let's get on to the fun stuff, the statistics on the strategy. Now, I did a lot of backtesting, and most of this backtesting was done on FX Replay, and there's also a few live trades in this data sample. And you guys can see I did 400 trade logs on this strategy before I decided to share it with you guys. And it's a comprehensive backtest. There's screenshots on every single trade I took with the date and the results. The stats are quite interesting. Like I say, about 400 trades and the return is 200 R. So it gives you a return of about 0.5 R per trade. And I'm going to explain that in a little bit more details. It's 179 straight winners, 175 losses, and 46 partial trade, which are trades which I have to close before the end of the day. And that also had a positive return. So roughly 0.5 R return means that for every 1% that you're going to risk, you're going to expect to get about 0.5% return. Now, obviously, you're going to either win 2% or lose 1%, but it averages out to about 0.5%. And this gives you the ability to predict more or less how much you're going to be earning over the course of a month or a year. Now, if I can just jump into the calendar quickly to show you guys sort of how many trades you can expect to take on a day trading these 4 pairs. As you guys will see, there's a lot of days where you have no trades. This week, for example, there was only 1 trade. Next week, 4. Some days, 3 trades. And there's a couple of days where I had 4 trades on the day. And as you guys can see, some days, again, you will have no trades. But this is roughly the distribution, how it looks trading 4 pairs on the strategy. And if I go to my months, I've grouped all of these trades by month. In March 2020, there was about 28 trades. In April, about 29. May, I probably didn't do. January, there was about 34 trades, so quite a busy month. In May, 13 trades, 6 in June. Again, I didn't do a full back test this month. July, about 24 trades. So I would say roughly about 20 trades a month trading on 4 pairs. So if we work on about 20 trades a month and you're expecting to get 0.5 R return, that means you're going to make about 10 R return per month. So if you're risking 1%, that's going to give you about 10% return on average per month if you can match these backtesting results. Which means on a 100k account, you're looking at about 10k a month profit if you're executing perfectly and you're getting a 50% hit rate on the strategy, which is a pretty big return. Obviously, if you're trading multiple accounts, if you get up to $1 million, you're starting to expect about $100,000 a month return. But again, I urge you guys to do your own backtesting on this and to see if you get the same results. Now I have a complete breakdown of the strategy on my website and the link is in the description. And I also included the full simulation database of all the trades I took, which is now up to 470 trades since I started recording this video, if anyone is interested. Keep in mind, I kept all my trades in the database, including the bad trades or the ones I felt I made a mistake. Some of them do have notes though. I will also be releasing a little update on the strategy in the future, but for now, I just wanted to keep things as simple as possible. And also, if you found this video or this type of content useful, please let me know in the comment section. Thanks for watching and all the best in your trading journeys.